What's going on? Alex here, and today I'm answering your tax questions from Reddit. So today we have a question from John Stoner, interesting name, and he's asking about Form 1099-G. What is it? So it says here, I got a Form 1099-G thing in the mail from the Department of Taxation in the amount of around $600. It says I need to put that amount on my tax return nonsense, but what is it? Will I end up owing because of this, or will I get more back? Explain it like I'm 5. Okay, so for context, let's first take a look at what Form 1099-G even looks like. All right, so let's pull this up here. And the official title of the form is Certain Government Payments. So let's pull up a copy and see what we have. Okay, and here's Form 1099-G here. Now, it looks a lot scarier than it really is. So essentially, what Form 1099-G is going to report is state tax refunds for the most part. Now, what does that even mean? So for federal tax purposes, when we're talking about the Form 1040, which is the tax return that individuals generally file in the United States, one of the deductions that's available on there on Schedule A is for state and local taxes. Now let's actually get some more context. Let's take a look at what Schedule A looks like so that we know what we're talking about here. All right, so we pull this up easily like that. Okay, so if we're looking at Schedule A, you'll see that over here in the itemized deductions, the state and local taxes are one of the available deductions. So if you're itemizing deductions on your tax returns, these amounts will be included in the total itemized deduction. So what does that mean? Now, you have a choice with Form 1040 of whether you want to itemize deductions or take the standard deduction. So let's take a look at Form 1040 and get a bit of insight on that. Now, over here, you'll see that the standard deduction for every year is clearly listed. So looking at the 2019 Form 1040, we could see that the standard deduction for the single filing status is $12,200. Now, quite simply, if the standard deduction is here and your itemized deductions are less than that in total, then you want to take the standard deduction to get the bigger tax benefit because these deductions decrease your total taxable income. On the other hand, if your itemized deductions are higher than your standard deduction, then you typically want to take the itemized deductions because it gives you a greater tax benefit. Now let's go back to Schedule A. So if we took a deduction for state and local taxes in the prior year, so if we're talking about a 1099-G that you received in 2019, we'd be referring to 2018 to see how that amount is treated. So if you deducted, let's say, $10,000 in state and local taxes and you received the tax benefit from it in tax year 2018, meaning that it lowered your tax liability, then some or all of the refund of those state taxes would be taxable in tax year 2019. And it makes sense because if you deducted $10,000 in state and local taxes, but you received a refund of $2,500 of those in tax year 2019, then essentially the net deduction that you should have taken is $7,500, but you took $10,000. That's why that $2,500 should then be included in income in tax year 2019. All right. So it's all dependent on whether you itemized your deductions in 2018. And how can you tell? So by looking at the 2018 Form 1040, we can see here that if in 2018 the amount on the standard deduction line was let's actually pull up a 2018 Form 1040 so you get some better perspective. All right. So we go here on the IRS website. We can take a look at prior years. And let's look at the 1040. See, I go all out for you guys. I don't just do this halfway. So this is the good old 1040 from 2018. And if we scroll down here, we could see that the standard deduction line is line 8 on page 2 of Form 1040. So if you look back at tax year 2018 and you see that you have $12,000 if you're using the single filing status on this line, then you took the standard deduction, which means that you didn't get any tax benefit from the write-off of state and local taxes, which then means that a refund of those taxes is not taxable to you in 2019. It has no tax implication whatsoever. You still want to input it into your tax software because typically even products like TurboTax will do an analysis of prior year to see whether that refund is taxable. So you should definitely enter it into the tax software. But I'm giving you a better idea of the mechanics that are going on behind the scenes to determine if those amounts are taxable. Now, if you itemized, keep in mind, in 2018 and you received a refund in 2019, the full refund may be taxable or a portion of that refund may be taxable. And it depends on how much tax benefit you received in tax year 2018. Now we're getting a little bit more than explain it like I'm 5, but on a very basic level, the IRS doesn't want you to receive a tax benefit in 1 year for the taxes that you deducted and then get a refund of those taxes, which means that the total taxes that you should have deducted should have been less technically, based on the fact that you're getting a refund of some of the deduction. So hopefully that is as close to explain it like I'm 5 as possible, and I hope that adds a little bit of color as to why the 1099-G is important, how to handle it, and a little bit of the mechanics of what's going on behind the scenes. So if you enjoyed this video, feel free to leave a comment, like the video, subscribe to the channel, and be sure to hit that bell icon to be notified of future videos as soon as they're released. With that said, hopefully this was helpful. Thanks for watching.